So, in the case of stock market, divergence is an important concept. Divergence means difference of opinion between the price and the indicator. As you can see here that the prices are going on downside as it's making lower lows, that the price was at this particular level, then it decreased more, and then it decreased more, and then it decreased more. So price is going on a downside track, while at the same time whatever indicators you are using, just like RSI, MACD, stochastic, or any other indicator, whatever you are using, they are showing an upside trend. So this is called as a divergence or difference of opinion. Whenever there is a price trend of downside and indicator is saying an upside trend, so it is known as positive divergence. And whenever the price is going towards upside, as you can see, it is making higher highs, higher price are being showing as higher highs, while the indicator is going towards downside, it is known as negative divergence. That is, the indicator is showing the negative divergence. At this point of time, how can we trade using the divergence, and how can we identify the exit points or the trend reversal in the case of technical analysis? Let's try this through the examples. So if you see this particular chart of a company, so as you can see that the prices are increasing from here, as the prices is showing an upward trend in the market, while as you see that the indicator of RSI is showing a downside trend, that the indicator is opposite the price trend. As you can see the price, if I draw the chart from here only, and if I just zoom this out, so you will see that the price is showing an upward trend here, that the price is increasing, but at the same time your RSI indicator is showing a downside. So this is a divergence. So it means that after this divergence there is a good possibility of reversal of the trend. So you can see that after this particular divergence or this particular candle, you can see the prices have gone down in this whole area. So the prices have started to reduce. Why this thing is happening? There is a basic reason also, that RSI is showing you that below this particular 70 level, RSI always shows the bearish nature, that whenever this stock price was trading above the 70 level, this was showing an overbought position, and when it's breaching the 70 level again, so it's showing a downside trend. Even though the prices were increasing, but it's showing a downside trend. So considering not the price but the indicator is an important thing here. Also, if I show you another chart, you can see that the prices were going on a downside from here, as you can see here, but at the same time your RSI chart is showing an upside line, which is an indicator that the stock price is going to increase. So earlier this was going downside, but at this point of time the price have started to increase, and this area is showing an increase of price for a shorter term. Also, you know that above 30 level, whenever there is an increment in the RSI chart, the price is going to increase. So above this 30 level, as this 30 level, the price is showing an upward trend. But do you always need the RSI indicator for knowing the divergence? This is not essential. We can use different kind of indicators, just like RSI, just like MACD, or just like stoic charts. So if I show you this thing, you see the price is showing a downside reversal, downside trend at this particular point of time. The price is going downside. At the same time, if you see the RSI is showing an upside trend. So if it is showing an upside trend, which is the divergent from the price, so you can see that in this area the price has increased. Also, if I go and choose the MACD chart, so you know, inside the MACD chart, whenever the blue line crosses over the red line, as you can see this blue line is crossing over the red line, so this is showing a trend reversal, that is, this is showing an upward trend. So I have drawn a line here, and from this area onwards you can see that there is an upward trend. But you know that very well that this upward trend is being represented by MACD chart. Also, at the stochastic chart, you can see also that whenever the blue line is crossing over the red line, this is also showing an upside trend. So in this area, as you can see, that the price is, the blue line is crossing over the red line, and this is again showing an upward trend. From here only you can see that the blue line has crossed over the red line, and beyond this level the prices have increased. So The divergence is an important concept in the technical analysis, and this helps us to identify the area in which we need to trade. Also, there is an important concept in case of divergence, that the divergence should be considered beyond the ranges. That is, if you are considering RSI, you know that there is an important level of 70 and important level of 30. So divergence should be identified from this 30 level. What I mean by that, you should draw your lines considering that if the price is below the 30 level, that is the indicator of RSI is showing a level below 30, so you can consider your line. Also, as you know, in the stoic chart, your levels are 80 and your this level is 20. So if the price is below 20, you should consider the indicator of stoic here. So in this area means what? This area of 20 to 80, the divergence should not be considered. Also inside this area of 70 and 30, the divergence should not be considered. Divergences have an important role to play while deciding when to exit and when to enter a new position based upon your past experiences, and these should only be done in these oversold and overbought position that you know already. So this was the important concept of divergence.